Tax-saving mutual fund schemes or ELSS funds have given on an average around 30% returns in the last 1 year. The top performing ELSS fund, in fact, has given more than 76% returns in the same time period. Should you invest in ELSS funds with a similar return expectation? We have with us Mr. Harish Bihani, Fund Manager ELSS of ICICI Prudential Mutual Fund to discuss on the same. He will also throw some light on how to choose an ELSS fund for your tax saving under Section 80C of the Income Tax Act.
If you look at the context of a 1 year return, the 1 year return is determined by the starting point. The starting point of a 1 year return, which would be calculated as of today, would be a point wherein overall markets were at a much lower level, given the pandemic which happened and the overall market correction that ensued following that particular pandemic. Post that, we have seen a swift recovery both on the economy side as well as the market side, and that is where you see that point to point a 30% return. The point is this, that what one needs to kind of focus on, as I have said earlier too, is that you think about your time horizon, which anyways is 3 years in the ELSS. It could be longer even after that, and within that particular time frame, what is the fund manager trying to achieve? If the fund manager is trying to achieve a healthy double-digit return CAGR over the next 3, 5, 10 years, in that case, in any way, it is going to kind of meet, in most cases, it's going to meet the end objective that you would have in mind. Past performance, past returns for any fund in general is no determinant of what future will look like. The idea with which any fund manager would run a fund is to ensure that they give a healthy investor experience. And that's the key with which any of the fund that we would run as a fund house, we would also be targeting the same, to ensure that we have a good, steady investor experience over a longer time frame. Don't think about an absolute return. So if I as a fund manager start thinking about an absolute return that I would want to generate, I would certainly have some numbers in mind. It would depend on the overall portfolio construction that a fund manager would have. What we intend to do as a fund house is to ensure that over a 3 to 5 years, across all our funds, we give a good investor experience. A risk-adjusted return is superior. In that context, in ELSS fund in particular, we are targeting a certain return threshold. Now, however, there are constraints to kind of pointing to a particular number. Needless to say that the idea and the intent is to ensure that you are well ahead of the overall market returns, your peer returns. That's the intent with which any fund manager would kind of try and run his fund, and also ensure that it is based on a risk-adjusted basis. It's not that you'd want to take any amount of risk to ensure that that return comes through. If you want to select any fund in general, and tax fund in particular, what you will have to look at is the longevity of the fund house, how they have delivered past performance, which is all available with you. You'll also have to look at and follow and understand the process that is followed by the fund house, and does it work with the philosophy that you are trying to get to. Essentially, what you are doing with a tax saving scheme is that you will get an upfront tax benefit depending upon your tax slab. You will also want that in 3 years, 4 years, 5 years, whatever is your time horizon, minimum 3 years, you would target a certain hurdle rate. There are different philosophies which each fund house run their tax fund with. If one understands the philosophy well of the fund manager, of the fund house, and the target return that the fund house is trying to attain with the risk-adjusted return, and that's the key term. What's the risk that you are taking to achieve the return that you want to achieve over that particular time frame is the key that you would want in any fund in general, and tax fund in particular. So tax fund is no different. It's in turn a multi-cap fund with a 3-year lock-in. You would want to target a certain return threshold in which you have in mind. do that, look at the fund house, fund performance over time, etc., and understand the fund manager, how he looks at the entire outlook going ahead. And with that, you can kind of decide to invest in a particular ELSS fund in particular, or any fund in general.